Welcome everyone to Vested Interest. Today we are going to do our portfolio update. We do these every Sunday. So if you're interested in this kind of content, don't forget to hit that subscribe button. And if you enjoy the video, hit that like button. Notification bell down in the corner as well, so you're notified whenever we drop any new videos. Again, we are going to cover the portfolio update activity for the week, any dividends paid, any purchases we make, any sales we make. We do those every Sunday. This is the update for the week ending September 2nd. This will come to you on September 4th. This week we added $4,363 to the portfolio after some sales last week. Within the portfolio, we used some funds, but we used, we were paid again, so we used some additional funds. And like I said, $4,363 added to the portfolio. Let's jump right in and see what happened here this week. We're going to start with the dividend reinvestment on September 1st. Intel Corp, ticker INTC, paid out $60.43. And with that $60.43, it picked up 1.92647 shares of Intel at $31.36. So as you can see, the drip is still set, and we are continuing to passively add more shares of the companies as they pay out. As the dividends are paid, they will immediately go reinvested back into the company that paid them and buy whatever amount of shares that comes out to you. So September 1st, $60.43 of Intel Corp, 1.926 shares. On September 2nd, we had a couple. Enbridge Inc., ticker EMB, paid out $23.66, which picked up 0.56891 shares at $41.58. And Kinross Gold, ticker KGC, paid out $2.57, which picked up 0.76971 shares of KGC. Which brings us to the first activity additional add to the portfolio. We invested $2,734.55 on August 30th, 2022. With those funds, we picked up 10 shares of KGC, that's Kinross Gold Corp, and they are out of the materials sector at $3.33. We picked up 6 shares of LyondellBasell Industries, ticker LYB. This is out of the materials sector as well, and that was at $83.85. We picked up 6 shares of Intel Corp, ticker INTC. This is out of the information technology sector. We picked those up for $32.35 per share. We picked up 18 shares of Vale, ticker VALE. This is also in the materials sector. We picked those up for $12.67 per share. We picked up 2 shares of Prudential Financial, ticker PRU, in the financial sector for $96.96 per share. Added 20 shares of Sibanye-Stillwater, ticker SBSW, another one out of the materials sector, at $9.06. We picked up 6 shares of Verizon Communication, ticker VZ, out of the communication sector at $42.66. 3M dropped way back down, so we picked up 4 more shares of ticker MMM in the industrial sector at $123.67. And lastly, on the 30th, we added 4 shares of Johnson & Johnson, ticker JNJ. They dropped all the way down to $162.58. Love to get them back under the 160s and the 150 and 140, but at 162, it's still a buy. So we added 4 more shares of Johnson & Johnson out of the healthcare sector. So we weren't done. On the 1st of September, very first day of the month, we added $1,628.96 more to the portfolio. We picked up 4 more shares of Intel Corp, ticker INTC, out of the information technology sector for $31.32. As you can see, it continued to pull back. We picked up 4 more shares of AT&T, ticker T. This is out of the communication sector for $17.49. We picked up 18 more shares of Sibanye-Stillwater, ticker SBSW, in the material sector at $8.55 per share. We added a new position in Whirlpool, picking up 2 shares of Whirlpool, ticker WHR. This is in the consumer discretionary sector. We picked those up for $153.57 per share. Another new position, we started a position in HP Inc., ticker HPQ. This is in the information technology sector as well. We picked up 25 shares there at $28.03 per share. We picked up 6 shares of Enbridge Inc., ticker EMB, out of the energy sector for $40.91 per share. And last but not least, we added to our Huntington Bank share position, ticker HBAN, in the financial sector, and we added those shares at $13.27 per share. That wrapped up the ads for the week and the dividends paid out. We did not have anything to sell this week. Everything is still down, so we will continue to dollar cost average down, decrease our cost basis, increase our yield, and increase our future potential returns. The current value of the portfolio sits at $93,582.51. The current dividend yield sits at 5.188%, so that has crept up even more. A lot of those positions we added to this week were higher yielding positions, especially the material sector, Sabini-Stillwater, Valet, but even Verizon, as it's pulled way back. 3M, they're well over 4%. I think Verizon's over 5% now. LyondellBasell's over 5%. So a lot of those positions are well over 4 or 5%, now 6% in some cases. Enbridge, for example, I think is in the 7% range right now. So as these have pulled back, a lot of the companies within the portfolio now are on the higher side. That was part of the reason for getting rid of some of the other positions. Not only had they run up significantly, some of them were on the lower yielding side. And with these massive pullbacks, it's hard to justify not grabbing these higher yielding dividend stocks completely on sale, in my opinion, unnecessarily so, but that's how the market works sometimes. So whenever you can buy those higher yielding stocks with a little bit more safety built into the price and increase your overall yield and dividend returns, in my opinion, that's what you should do. So that's what I am doing. And with that said, the annual dividend income has crept back up to $4,854.97. Whether the market's down, up, sideways, this should continue to grow as the companies within the portfolio pay out dividends and they buy more shares, which you saw with Intel, Kinross Gold, and Enbridge paying back dividends and immediately reinvesting back into those companies. So that should grow, as well as whenever we add new capital. Keep that snowball growing as we continue to increase our positions. Let's run, Let's run through a quick sector allocation update. Communication is sitting at 9.81%. Consumer discretionary, with those purchases in Whirlpool, has crept up to 5.17%. Consumer staples, 5.31%. A lot of what we sold was out of this sector here, so we'll look at trying to find some value there whenever we can and adding back to this position again. Energy is at 5.43. Another one we'll look for pullbacks and hopefully add to in the future. Financial sitting at 13.77%. Healthcare is sitting at 9.11%. Industrial sitting at 10.71%. Technology is sitting at 12.66%. Material sector is up over 10%. Utilities, we don't have anything in utilities, so that's another one we're going to be looking to add back in whenever we see some pullbacks there. REITs and real estates now makes up the largest portion of the portfolio, 17.98%. That is starting to get a little on the heavy side, but again, some of these are higher dividend yield paying REITs, and again, if they're on sale, I'm going to buy them regardless of what sector they're in, but we will try to balance this as much as possible so we don't get too much exposure to any one sector. That way, if we have a real big dip or drop in those sectors, it doesn't pull down the overall portfolio significantly. But again, it's not really about that overall value of the portfolio. It's about the annual dividend income that it produces. Well, that wraps up another week. I brought back an old photo here from whenever we had a storm out back. I clicked some shots. I know this is an older one I haven't used for a while, but this reminds me of what the market is looking like lately. You know, a lot of red out there, down and up. It might be down significantly one day and up significantly another the next day. So a lot of volatility, kind of like this storm out here, but way out here in the distance, you can kind of see that light at the end of the tunnel. So hopefully over the next year and a half or so, we start to see inflation come down. We start to see the Fed normalize rates, stop the rate hikes, significant rate hikes anyway, and get the markets back to kind of heading back north again on solid foundation, not propped up by easy money, low rates, but actual fundamentals and what companies should be worth based on what they produce. Not some of these zombie companies that are out there running around now that have no cash flow or even negative cash flow in a significant amount of debt and are only propped up by the loans they can get at low rates. That's not the market we want. We want a market on sound fundamentals with companies that actually produce products that people buy, which produce a profit, which produces free cash flow that the companies can use to pay us dividends. That's the idea. And then hopefully those companies continue to grow as well and produce revenue on the other side with the stock price valuation increasing over time. So as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think of the video. What did you add to your portfolio this week? If anything, go ahead and put it all down in the comment section below. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, suggestions for future topics, or constructive criticism. Go ahead and put it in the comment section. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. We'll see you in the next one. Hope you are having a great Labor Day weekend and are ready for another week. Going to be a short one, no trading on Monday, so it'll all kick off on Tuesday morning again. We'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount not comfortable losing. Always do your own research, best based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.